24/7. We are in selection MCQ series and today's topic is trade finance. We'll be covering the objective questions on trade finance. Trade finance, as you know, it's module A of BFM. Very important topic, very difficult topic. So that's why watch the video till the end. Okay? Let's start. The method of payment where the exporter relies on undertaking of the bank to pay is known as bank guarantee, LC, letter of comfort, and none of the above. Now, what do you mean by this? The exporter relies. Relies means what? What do you mean by relies? Okay, let me explain you first. See here. Suppose if this is the exporter, let me draw it over here. Exporter, okay, and this is the importer, buyer you can say. Okay, this is the exporter, this is the importer. Now there are two methods of payment. Exporter will send the goods to the importer, goods over here. Okay, he'll send the goods. Now there is chance number one, importer will directly pay it through a bank. Let's say there is a bank involved over here. Okay, so importer will pay to the bank and this bank will pay to the exporter. Okay, that's a normal transaction. This is the bank. So importer will pay to the bank and then bank will pay to the exporter. Means what? Here if importer does not pay to the bank, then the bank will not pay to the exporter. So this is known as collections, normal collections. Collections means what? The importer first pays to the bank and then bank pays to the exporter. But the question over here is not this one. Question says the exporter relies on the bank payment. Means what? Here exporter knows that bank will pay at any cost, whether this importer pays to the bank or no. So this method is known as what? So this method is known as bank guarantee or LC or comfort or this none of the above. Remember, one important point I need to clarify over here. Bank guarantee means what? Bank guarantee is the secondary method of payment. Means what? In bank guarantee what happens? This importer will pay to the bank, to the exporter. Okay, but if that importer does not pay, understand this, if the importer does not pay, then the bank will pay. So bank guarantee says it's a secondary method of payment. Secondary. Okay, secondary. LC is a primary method of payment. Primary means what? This exporter will receive the payment from the bank only. The exporter won't receive the payment from the importer at all. So this is the right answer. The exporter totally relies on the undertaking of the bank. And what is this letter of comfort here? Letter of comfort, letter of understanding, these are all the other names for bank guarantee. It's a sort of guarantee after all. In comfort, what do we say? In letter of comfort, the bank tells that somebody else that see, you do this transaction, if something happens, I'll take care of it. Means what? After all, it's a guarantee. There are various names: letter of comfort, letter of understanding, letter of anything you can call it. Okay, letter of agreement, anything you can name it, it can happen. Okay, so the point over here is both these are always same, A and C. So the answer over here is letter of credit. Clear? The red clause LC is also known as, what is this red clause LC? Standby, anticipatory, automatic and back to back. What is this red clause actually? See this. In the red clause what happens? There is an LC. Okay. This is a letter of credit, let's say. In this, under terms and conditions, under terms and conditions, it allows you, there is one term which says that the pre-shipment finance, okay, that will be allowed. Okay, red clause LC means it says that pre-shipment finance will be allowed. Now pre-shipment finance from whom? Pre-shipment finance can be one from the importer. Means if the importer pays the advance amount, then also it's called as pre-shipment finance, because after all it's a pre-shipment only. Or second is, it can be received from the bank also. Some bank may give the pre-shipment finance. Okay, so red clause LC means what? Standby, anticipatory, automatic or back to back. So it means the answer is actually anticipatory. Why? Because here the exporter is anticipating the pre-shipment finance. Anticipating means imagining or expecting to be, that is the right word. Okay. So red clause LC is a anticipatory credit. Now what are these others? Standby, automatic, back to back. I can explain you in one line, but not more than one line, because otherwise what happens, this standby itself is having almost 1 hour lecture. Similarly for others, automatic and back to back. So standby means what? Standby is the other name given to the guarantees. Okay. In India or Asian countries, we issue the guarantees, but in Europe and USA, they say bank can't issue the guarantee. So what does it mean? Bank can't issue the guarantee. That's why they have opened this standby credit. So bank can issue standby credit, which is a sort of guarantee, but bank can't issue guarantee. That's the logic. But after all, see, it's just a game of words, nothing else. Automatic credit. Automatic credit means that credit which gets refined or renewed automatically. Now see this automatic credit, there are 2-3 separate types of automatic credit. Okay, then that is automatic. Second is, third is back to back. Back to back means what? It is similar to that of the transfer LC. Means where my customer is or my exporter is just an agent, there it is called as back to back. Okay. Somebody is asking me what are the types of automatics here. There are revolving credit is one type. Revolving means it gets automatically renewed. Okay. Then there is another clause called as there is one clause, there is one LC which is auto LC, it's called as, means that evergreen LC. Evergreen LC means what? It continues till lifelong until it is closed by giving in writing. So that is automatic. These are all the types of automatic. Okay. If export cargo is lost in transit, the exporter should claim under the marine insurance, claim with DICGC, seek write-off of post-shipment credit, and seek refund of customs duty. Means imagine, let's say I'll give you a logic. Okay, if you have a car insurance, okay, and your car gets lost, you have a car insurance, your car gets lost, what should you do? Will you say to the bank that no, car is lost, now my bank finance, you had given me that car loan, now waive off, I can't pay you? Will you say that? Illogical, right? So that's why this C is out. Write off post shipment. Who has given the post shipment? Bank has given the finance. How can bank write off when your cargo is lost? Bank can. What have you to do? If your car is lost, you have to go to that insurance company. Same logic over here. If the cargo is lost, you need to go to insurance company. Then what is the DICGC? DICGC is for insurances for the deposits. It is for our retail banking, right? Retail banking, that all that deposit, saving current deposit, right? So that is the point. Up to 5 lakhs we are having it, but that does not at all attach it to this cargo and trade finance. Okay, that's out. Seek refund of the customs duty. Why should the government lose their customs duty? Because of your foolishness. I would call it that the same way, isn't it? If the cargo is lost, it means it's your foolishness. You didn't place it properly or something happened. Or let anything happen. You can go to the marine insurance company and get it back. Simple. Keep it simple, isn't it? Before going ahead, download Adda 24/7 app on your mobile. In this, you will be getting the premium study material plus live classes, ebooks, tests, everything. Whatever you require for clearing JIB and CIB, you will get it over here. Okay. A formal legal commitment to extend credit up to some maximum amount over a stated period of time is called as letter of credit, revolving credit arrangement, line of credit, and trade credit. Okay. Formal legal commitment to extend a credit up to maximum amount over a stated period of time. Now what is this here? Up to maximum amount is given and commitment is given, and then over a stated period of time is given. So amount is known, time is known, and it's a commitment. So what is that? LC, revolving, line, and trade. So remember, trade credit or this letter of credit, these are directly related to trade finance only. But is there anything mentioned over here regarding trade finance? No. What is it said? Any loan, I am a bank, I have given a commitment to give you some amount for a stated period. So it can be what? It is called as line of credit. Okay. What is this line of credit? Okay, let me give you some logic. Okay. SBI. Imagine, I am taking a hypothetical example. SBI sanctions, let's say, to Reliance. I'll write it in dotted. Reliance SBI sanctions. Let's say it says that okay, I'll give you 100 crores, 100 CR, okay, to Reliance. So under this SBI sanction line of credit, this is known as line of credit. Line, okay. So here SBI tells Reliance, I am sanctioning you 100 crores based on all the documentation what we have done. Now how to use this 100 crores? See this. SBI will tell you can use this line, line of credit under either LC, either pre-shipment finance, or trade finance, means import finance also you can use it, trade, or you can use it as CC, you can use it as term loan. I am sanctioning you. So what does it mean? Line of credit means bank sanctions a specific amount for a specific period, and that needs to be distributed further into various types of loans. So line of credit is actually the umbrella arrangement, which is at the top level, and under that we have various types of loans. Okay, so that is known as line of credit. When a firm needs a short-term funds for a specific purpose, the bank loan will be likely short-term funds. If some firm is needing short-term funds, revolving credit, transaction loan, line of credit, and none of the above. Line of credit is, just now I told you, it's an umbrella arrangement. None of the above is out. Transaction or revolving credit. Short-term credit is given by how? CC, cash credit. What is this CC? CC is a revolving credit, isn't it? Revolving. Every month you, means not month, every day also you can pay. Every time you pay, it gets renewed, isn't it? That's simple. Subscribe to Officers Adda 24/7 YouTube channel. In this channel, you will be getting latest updates on JIB and CIB, and importantly, free YouTube series on all the subjects of JIB and CIB. All the subjects. Click on the bell icon. Very important. Once you click, you will get all the latest videos. Here, all the subjects, when I am saying, it means what? CIB, all the 5 subjects, 4+1, right? If the importer refuses to accept a bill drawn on him, the exporter should reimport the goods, must find the alternative arrangement, or buyer throw the goods in the sea, and A or B depending on the situation. Logic, quite logic, isn't it? See here, I have sent these goods. Suppose I am from India. Okay, I'll give you 2 cases. Okay, India. I have sent the goods to the nearby country. Let's say which country? UAE, Dubai. That's the nearest country to us. Okay, we have sent it to nearest country, UAE. Now if the importer over here says I don't want your goods, so you can definitely bring it back to India, isn't it? I can bring it back because it's nearby. Hardly how much time does it require? Okay, but now imagine if I send the goods to long part, somewhere USA. Okay, Alaska. I send it to USA. From here, if the buyer says no, I don't want your goods, what should I'll bring it back. The cost of bringing it back will be more than the cost of the goods. So what will I do? I'll go and find another user in same USA or some nearby country. Okay, I'll find another user and sell it to that person. So should reimport the goods depending on the situation. Must find an alternate buyer, yes, depending on the situation. So A and B can be true. So the answer is A or B depending on the situation. The bank may refuse to accept the export bill of collection when the customer has insufficient limits under the bill discounting, when the documents have discrepancies, when the documents are received from non-customer, and all of the above. I'll just give you the answer because this non-customer you don't, many of you don't know actually. Non-customer is a huge business. Okay. The answer is actually, see here, all of them are correct. Why? Because the customer has insufficient limits. Suppose if that customer doesn't have limits, how can the bank sanction the further loan? So A is true. When the documents are discrepant, means what? The documents are not proper. Then how can the bank accept the export bill? When the customers are received from when the documents are received from non-customer, the customer is not at all of my bank. How will I accept it? So all of them is true, isn't it? Advance remittance for the importer can be accepted by the exporter in India provided the advance does not carry any interest. The shipment will be made only after 1 year from the date of shipment. Advance does not exceed 25% of the export value. Rate of interest is payable does not exceed Libor plus 1%. That should be one more option, that is E. E is both A and B and D. A and D. Because why? If I have made the advance, if I have received the advance remittance, okay, advance remittance from the importer can be accepted by an exporter in India. Means I have sent some goods, and before that sending the good, that guy has given me some advance. So if that advance does not carry any interest payment, means that person says, okay, don't pay me interest, then I will be happiest person. And last one is, if the rate of interest is payable does not exceed Libor plus 1. Now it's not Libor, now it's ARR. Okay, alternative rate of this arrangement. Okay, so now we have ARR, not Libor. So if the rate of interest is ARR plus 1, so that is also maximum 1% if I am giving extra, so then also it's okay. So the answer is E. Okay, now let me come to this this revision batch and video course. Here there are two batches available now, video course and revision. I'll show you both. Exams are near, so you'll be needing the guidance as such. Okay, 80% discount is available, double validity on MAPAX is available. Use the code Y432. I'll show you how to use it. Okay, I'll show you both the batches now. One is revision, second is this video courses. Video courses is for those who can't attend the batch because of some time issues, right? So click on, go to the front page of Adda 24/7, click on JIB, CIB, click on CIB. Look at this. First, what you are seeing is the revision batch, this green one. Click on this batch. Okay, you'll see the details. What are the dates, timings, what are the study plans, everything. Look at this part. Recorded videos are available. Importantly, recorded videos means if you miss out on any class, you can definitely get back. Okay, so click on more offers. Put the code Y432. Y432. Click on apply. Look at this, 80% off you are getting. 1599 reduces to 3199. Such a huge discount. My God, isn't it? In fact, I'll show you video course also. Video course is also the one of the best batches. Because why? If you can't attend because of some bank timings, what should you do? After all, we have to study. We have to make the solution, and that's why we have brought this video course batch. Because we had received many complaints from the banker that sir, we can't attend it. So that's why this video course batch. See this. Click on this video course batch. You'll see the details, what all topics are covered, what all are the points to be covered. Look at this fees, 5059, 78%. Click on more offers. Put the code Y432. Click on apply. Look at this, 80% again, 22999 reduces to 4599. So that's why I would suggest join the batch ASAP. Because how many days are remaining for the exam? Okay, you need to work fast. Okay, chalo, bye from my side.